I understand it's frustrating to watch positions go against you, especially when you believe that they should be going for you, because everything that's happening is what we expected to happen. The only thing is we expected the dollar to fall instead of rise, and we expected gold to rise instead of fall. But all the things that we expected to cause those moves, they happened. Those were the things that nobody else expected. All the bulls that were riding the wave of liquidity and drunk on all that cheap money and living in a stock market bubble that they couldn't see, we were sober. We saw the bubble for what it was, and we did the smart thing instead of the foolish thing. And for a while, we weren't getting paid. Well, I think those days of waiting are coming to an end. I think we can see the light now at the end of a very long tunnel. We were right on the macroeconomic fundamentals, and we were right on the investment strategy as well. Yes, we're going to get paid later than I thought on that strategy, but the payday itself is going to be much bigger because all these years of can kicking, more than a decade of kicking that can down the road, during that time period, the problems have grown so much greater. The bubble is now so much bigger and so much more air would be coming out that I think the Fed is going to have to work harder to pump that much more air into it to try to prevent the collapse. And so the ultimate collapse of the dollar is going to be much greater. In fact, a decade ago, I thought that hyperinflation was a worst case, low probability scenario. I knew it could happen as a worst case scenario, but I thought the probability was low. At this point, though, given how long this has gone, I think the probability of a hyperinflation scenario is much greater. Is it now the most likely scenario? Probably not. I think the dollar won't lose all of its value, which basically happens in hyperinflation, but I still believe it will lose most of its value, which would be more than 50% of its value. That's a lot to lose, and that means there's an even bigger amount to gain if you're investing outside the dollar. But I think the risk is very real that we have a run on the dollar and we have an inflation rate that would wipe out 80% or more of the dollar's value. That would probably constitute hyperinflation. Even if the dollar did go to zero, it would get pretty damn close. And so if that is a higher probability right now, it's even more important that you guard against that risk. And the way you do that is by getting out of US dollars and all US dollar denominated paper assets. So you want to own foreign dividend paying stocks. You want to get into the emerging markets. You want to own commodities. You want to own the precious metals. You want to own the miners, and you want to buy them now while they're still cheap, because if you don't buy them cheap, you'll end up buying them when they're expensive, or worse, you won't end up buying them at all because you won't be able to afford to buy it because you will have been priced out of the market.